This is gonna be quick little market kind of scan going forward, right? Just the outlook that I have, the edge that I think is within this range, the opportunities that I think are developing, and are playing out as we continue on into the first month of Q3. So, first of all, what I want to say here is this short is a quarterly idea, right? This is a higher time frame perspective in terms of a broader equity market top, and this is no surprise that this is going to take some time to develop. We have the red flags and the risk on, and the green flags and the risk off, which is a red flag for the broader market. We have, consumer staples seeing really aggressive bids, really clean structure. We have a lot of leading names in sectors like semiconductors and financials and just mega cap tech in general, giving you that exhaustive look and really looking subpar in comparison to how some of these other names look, right? And a lot of the leaders, a lot of the very liquid names, the very volatile names are giving you that exhaustive look. And I do think that we are continuing to build out a broader equity market top that will lead into next year and potentially into like 2027, 2028. But that's something I don't really need to speculate on, and that's something that I don't really need to focus on building up positions for. Right, my thought process is, the kind of quarter 3 positioning right now. So, we're continuing to develop signs of exhaustion, in my opinion. Right, we obviously have in what I think is a distributive top being built out. Right, where we see exhaustion on the highs, we see lower volume at those highs, we see small spreads, notable wicks, we see a very lackluster structure. It just, like I said, takes some time, right? We came into this week, last week we kind of developed this shorter term top at 626 where we gapped up off CPI, faded it tremendously, and see the aggressive move in Wednesday where we saw that notable volume and extensive wick, the highest we've seen since the 9th on an hourly perspective. And so, yeah, it's like that's not the opportunity right there, right? We have a top that's being built out, in my opinion, that's been, we're only like 6% above May highs, 5% above June highs, right? Or June 11th CPI print. And this is in the midst of, a 32% rally. So it's not, you don't have to catch the entirety of the move. You also don't have to be early and try to be the hero and timing the top. That's a fool's game, in my opinion, right? As far as like trying to time the top poses no really substantial edge beside and poses no gain besides being able to say that you did it, right? But this is a process. Topping out's a process, and this takes time, right? We've seen this higher low put in on the 23rd, leading into the June quarterly expiration. This was pretty appealing as far as a long side trade on internal structure, but this just continue to run and develop this kind of distributive range, right? But when we have such a wick on such notable volume, this was expiration, this was leading into OPEX, and now we have the 2 weeks of earnings seasons, right? So when we have that happen, you have to just understand the time horizon of your trade, right? We can't necessarily sit here and kind of trade the shorter term distribution when we have a wick like this, right? That's why I said inverse leveraged ETFs in January or March positioning for quarter 1 of next year via puts is the best edge here, and leaving room to add, right? Even when we started developing this top, you can see, first of all, that low liquidity summer environment being one of the big reasons why we're floating and it's seemingly effortless, especially after such a move happened down here. You can see that this is going to take some time, and I haven't really seen anything to kind of counteract my thesis. A lot of the things that I've noticed that are red flags are continuing to develop red flag looks overall, and it's just a patience game, right? The earnings season sparks that volatility, brings that liquidity, offers that change of hands, offers those catalysts to kind of offload the inventory of those larger positions of those sellers up here. And in general, right, we have a 32% move, and they're now really seeing the progression kind of lack. We're only 3% above the February highs, right? This is not anything crazy, right? We had a clean reversal, right? There were a lot of signs that that was going to happen. Yes, I was a little bit early on trying to call the top, but there have been opportunities along the way, mostly on commons, right? The leveraged exposure has become less optimal up here as just calls in general become more expensive. And we kind of, like I said, get that float, right? That spot up, vol down kind of effect, right? VIX is getting crushed, right? Which, in my opinion, we had that nice spark back in May, small one in June off the Iran-Israel news in U.S. In my opinion, we will see a vol spike. I don't think it'll be a crazy vol event, but the more that this vol gets compressed, the potential that if something kind of kicks off, it can spiral into out of control with all the people that are short vol having to buy that vol back. But that's just speculation, right? So there's been nothing that really strays me away from the short side focus. We have that nasty wick, the continuation on lower volume, the stall on the Monday session, where we get a nice pop to new highs, fail into an end of day breakdown, and then we see the breakdown on Tuesday, where we, form that kind of higher low off of 626, right? See a nice pop in the close, see the seller off open yesterday, and then rally off some more news. Yeah, that's a little bit annoying, but that's why I said, you have to take what you can get. Take this short-sighted opportunity off 626 and cover appropriately. You can take this position on Monday if you feel like it a little bit speculative, and then Tuesday as well, a little speculative as well, but there's short opportunities, but you have to be very careful with the shorter dated play. Understand the higher time frame positioning here, right? Same thing on QQQ. We're basing this July 15th high, right? Can you really, if we pin this under 626 on Tuesday and formed a lower high, it would be a completely different story, right? But you have to understand where the edge is here, and it's really just passively adding in some commons on some names that have a little bit more room to run, which I'll talk about in a second. And some names that are, those rotations that you're seeing develop. And then developing that short side exposure for 2026, right? And leaving room to add and getting aggressive as we change that character on a daily and maybe weekly perspective, right? Which takes a lot of time as well. So, you can't be upset about this, right? We have this window that is now just open, right? It's been open for less than a week. This is the 2-week window. We had Google and Tesla last night. We have Apple and what else do we have? Apple, Microsoft, Meta, Amazon all next week. FOMC next week, right? There's a ton of volatility and events that can spark that liquidity. And so, it's not, and these can shut down the August flows as well, right? You see NVIDIA, we had a 3% move in 20 minutes on the Tuesday session, gap up, and we see that spark on Wednesday at noon, right? This just isn't ready yet. You can't really aggressively short this on a daily wick like this, an overnight gap of about like a 1.5%, and then a higher low found within it, right? You have to be pretty careful with that execution and understand that this isn't anything insane quite yet. But the higher time frame short side focus, I still think is very, very vulnerable, and I still think NVDS is a phenomenal opportunity here, down to 115 to 110 by the end of the year. I do think that NVIDIA has a ton of volatility waiting for it in the back half of this quarter, and I think that a lot of people are going to be surprised at how aggressively this happens, right? This is one of the later reports, about a month after the rest of MAG's 7 names. So we're going to see if we can have some movement to the downside and then spark, maybe like in the February report, a lower high off of that earnings report in August on NVIDIA. Apple, this is one I've been wanting to push into that 224 range, right? We haven't really seen an aggressiveness. I mean, we've seen a seller off of this 213 range, this 0.5 and lower confines of the gap that is left to be unfilled from the April 3rd sequence. But we haven't had a crazy amount of fall through, right? We had the breakdown, run up into or breakdown off the report, rally, another stall. We kind of find a higher low internally here and get the run up where we're now sitting under 213 and haven't really seen much fall through off that seller. That makes me think we're gonna draw into that weekly last point of supply on a higher time frame distribution, right? And the report happens to be next Thursday after hours. FOMC and then the Apple report, right? That's pretty big. I'm pretty sure it's at the Fed meeting. Let me go ahead and check real quick. That's pretty big. And we have, like I said, Microsoft, Meta, Amazon as well. Those are okay. The 30th is the conference, right? Let me make sure. Yeah, the 30th is the conference. So we have FOMC next Wednesday, right? This was wrong. FOMC next Wednesday. Apple report, Meta report, Microsoft report, Amazon report. These are big time movements in the equity market, big time binary events that are going to spark a lot of volatility and liquidity. And that has the potential, similar to this report at the end of January, to put in that lower high, offer you a short, not only on a higher time frame perspective, that inverse Apple ETF is very appealing here. If you can get a position within this 5% range, you can get a pretty clean move down to sub 200 within this quarter. But on a shorter expiration options trade, on an IB flush, if we can get a little bit of a run up, have a small gap up, those contracts get crushed. We don't meet the implied move. The implied volatility is going to be high into that report, and if those contracts crush, the implied vol goes down. That Vega is going to exponentially crush the price of those contracts, and you can really run up 1,000% or more. Right? These ran over 1,000% this day on 0DTEs. So it's setting up something on Apple. We have a 4% gap up on Google into the report from February, which I've been talking about this as a comments position for a while. This is one of those names that has an unfilled gap of 7.25% that has not been touched since it happened. And you can kind of see the climax begin to build out in March, a little bit more extensively in April, and then we just form these higher highs and higher lows throughout the entirety of this rally, right? Coming off of a really pivotal March 2024 new week opening gap, taking out the September lows, see a nice pop, higher low. See a nice pop, we have a higher low off some news that's absorbed. See another nice pop, we put in a nice higher low off of a pretty pivotal spot that sparked another rally in November of 2024. And then we see the consolidation underneath a really important 182 range that, gets you such an easy move and a really, really clean weekly commons trade off 163, off 175, pulling into this peg from February. And that's it, right? Even if you just long it off of 175, you're already seeing, 10, 12% move, potential for 20. If you took that position at 164, 20%, and it's really just finding the names that have a draw, right? Supply and demand is the most simple, basic concept of the stock market and the financial markets. There's not enough supply here, right? We have sellers. We've seen signs of a seller. Do I think that this is going to push new highs aggressively and rally exponentially to $300? Probably not. Do I think that this could see sub 140 next year? Probably. Do I think that we're going to see 200 before 140? Yeah. It's just as simple as the draw, right? And it's as simple as adding in, covering, adding in on the higher lows, covering on the higher highs, right? And just trailing stops, watching that position and managing it, right? I think it's a pretty good name, and I think it's one of those names where, Apple has a draw to 224, but it's not really a good long, right? Google, I think, has that clean structure and that pretty clean opportunity of a peg fill, right? So that's the Google chart, right? I do like that a little bit higher. That was a good commons trade, but nothing I'm really focusing on after the gap on the report, besides maybe the full peg if they, pull something into a reclaim of 193. Tesla down 7% of the report. I never really liked this daily chart following these two subsequent gap downs on the 1st and on the 7th. We had this major capitulation print that sparked a nice rally and reversal and consolidation underneath the gap that gave you a 10% intraday move. But then this failed breakout, right, and lack of follow through on these daily candle closures really didn't give me a very appealing look or a good feel for this name. So it's just not a focus. If they manage to put in a higher low on this earning gap and kind of develop a clean structure, the weekly chart doesn't look terrible, but I think this can push a little bit higher. I think that the long opportunity becomes a little bit more vulnerable and appealing on a better structure within this name. So I just don't really care too much about it right now. Microsoft, I do as well think that this is building out a parabolic top and is going to revert into the peg similar to how it did for the January 30th 5-6% gap. Meta, the same kind of thing. We have a report here. I think that's going to be the kind of catalyst on this name, as well as Microsoft, one way or another. And Amazon has this February earnings gap to fill. Still, so really nothing's changed since like the weekend. Just continuing to wait, be patient. Not much of an opportunity intraday wise. I actually thought this would be a pretty clean lower high within this 3% move we had on Nvidia. But with such a gap up, we just managed to base the previous daily high and rally into close. Kind of same with SPY as well. Our Qs was the vehicle because this was hit a little bit more aggressively. I thought that this could result in a little bit more appealing of a move after pulling into that discounted area off of the 562 weekly open. We see a nice like 3-point fade off of RIP, but then we kind of put in this higher low and rally into some data that doesn't end up getting us any more continuation to the downside. So it's just a game where you have to be patient, right? And the opportunities for shorter expiration are not necessarily they're really appealing right now. And in general, I think that in general, I think that the opportunities are on a higher time frame basis are more lucrative, right? So that's something that I keep in mind. Bitcoin, a lot of these Bitcoin names don't really look good. This was an exponentially increased volume with a very small spread, fading new all-time highs and giving you a very similar look to how we topped out in quarter 4 of 2021, following the higher low put in the rally. Very, very reminiscent of that, and is not something I'd really touch, especially when we have a name like Coinbase at new highs. This was a super, super clean long down here off 240, right? But then we kind of developed this parabolic top look, this massive, massive influx of volume, put in a higher low, rally on like no volume to new highs, where we see an exponential amount of volume on the OPEX from June or July. I don't really. There was a clean look at 240 for that little inside bar, but nothing really appealing to me. MSTR, that same kind of thing. This massively imbalanced print from the 24th at the highest volume this name has ever seen, and an aggressive parabolic top with the subsequent 50% decline after. Now reverting back into this imbalanced range and seeing a notable seller off of it is just not a good look, and I do think this revisits 200. I don't think this was a good long in April. I think this revisits 200 before I even could consider touching that as a long focus. And then the final one being Hood, which there's been no edge, no reason for me to short this name. I still do think that this is developing a parabolic top after a historic move from 2022 lows, but I don't really care too much, right? Like I'm not. Look at this Friday print. Look at the volume here, and then the subsequent exhaustion as we trade higher. But I don't have an edge on this, long or short, yet. Pound here, the same thing, right? We see a really clean move yesterday, and then Tuesday, and then the reversal yesterday. But I don't really have an edge here yet, right? There's been opportunities that I've waited on and wanted to see if they develop, but there's no clear lower high on the hourly or daily perspective. It's just waiting, and we have a report in 2 weeks on August 4th. I think something still happens on this name. I still think we revert to $45, and I have nothing to really change my opinion on this. We're seeing very notable legs with volume backing them after the all-time high pops where we see exhaustion. It's just a patience game, right? So, same thing with banks. I haven't really seen much of an edge in a lot of financials short side yet. I discussed that this could take a little bit similar to how it did in quarter 1. It takes a little bit of time to develop this distributive look, and we haven't seen such a clear-cut top yet, right? This is an all-time high failure after the report on Schwab, but we also have a pretty aggressive 2% peg to draw into. Visa and MasterCard have these gaps from mid-June to pull back into as well, and could be our lower highs. There's not really much of an edge here quite yet, especially in price discovery in this sector. This just digested Berkshire Hathaway, the full movement or the full candle from April 7th, so a little reversion may be necessary. This isn't anything I really like short right now, especially with a 5% gap unfilled from May 5th, and that also kind of being a Friday as well. I've discussed as to why like Fridays could very, very, not all the time, but very rarely put in that top on a Friday, right? And then a couple other names. Bank of America's digesting this gap. It's not really a good look, in my opinion, on a lot of these names, but you don't really have much of an edge yet on financials. So um, there's that, right? The energy sector, I still do like comments on energy, similar to Google. It's one of those higher lows where you're adding in, right? Covering at the higher highs, and then potentially re-adding into that position as we trade a little bit lower, right? We have a full gap from April 3rd that we have yet to fill, right? That's pretty big, and a lot of these energy names have been lagging. Now, I will say that this print is a little bit off-putting. I do like the exhaustion from sellers after and the continuation, but then we kind of, like the 18th of July, that print's not the most appealing. We see some consolidation and a nice pop on Tuesday. It's a speculative trade where I would be pretty cautious. Uh, but I do think like a name like Viola, right, down 0.8% off the report this morning, point 0.9, closer to 0.9 than 0.8. But it's just a kind of weekly higher low. We had the progression gap reclaimed, the lower confines of it, the upper confines of it. We see the continuation, an inside bar and low volume. This is a notable like capitulation on the 16th, where we see it fully digested and then attempt at a higher low within this kind of overnight gap on the 18th, right? This is not the worst look in the world, right? For a push to one upper 155 range, like upper 150s. And this has a little bit more room to go, but it's a common trade that's a very like risk-free scenario after the longs that building out on these higher lows and covering on these higher highs. So I don't really have like a crazy bullish outlook for energy. I do think that this can trade lower, but I definitely do think that we can revert into these full gap fills that we have yet to fully fill on the majority of these names, like in ZOM, CVX. But this is a very off-putting candle spread on a gap up with a lot of volume. So I'd be interested to see how that plays out. Oxy can pull back into that $50 range, but also another very notably aggressive candle on the 15th, right? So it's just I'm not really crazy bullish energy, but I do think that some of these have some reversion and room left. And VLO being the cleanest like individual holding of this sector, in my opinion, on a daily and weekly perspective. With if you want to just get exposure to everything, XLE being your best vehicle. And it's a pretty slow moving name. You're not going to really take a big hit as long as you set a tight risk. Understand your targets, and like I said, trim appropriately, and maybe re-add on some higher lows. This just depends on your exposure and your edge. Like this is a really clean chart, and it held up very well on the 23rd and on the 8th, 16th in comparison to just XLE in general. So this would be one that adding in your position here on this progression gap and this gap defense on a name that has been building out climaxes ever since August and September, and has kind of been lagging the sector in general in terms of movements made within this sequence since the April top that we put in on the energy sector. But it's something to keep an eye on. SMH, big time spot at 283, being the July previous all-time highs. And I mean, we're definitely seeing the exhaustion, right? 1.9% gap with such a small spread. We have the appealing leg last Wednesday that's bid up. Continued exhaustion on lower volume, an aggressive amount put in on Tuesday's print, but we continue to kind of fail to crack under that 283 spot. Once we get under there, I think that's going to be a pretty big time point to lose on a daily and weekly perspective. And we haven't seen that yet, right? So just keeping that on watch and waiting to see if that buyer can be, wiped, right? This is kind of our fourth test on this range as far as wickage goes, and we've seen that exhaustive look, but nothing necessarily clear just yet. Same kind of thing with ARC, right? Like I said with Hood and Coin, this is really giving you a parabolic top look. At a minimum, I think this refills the gaps at 60, like 62, 64, maybe sub 59. But there's like, look at this candle, look at this green to red move on Monday, the wick. Like, it's just not anything that I like. it's definitely something that could revert a little bit higher as far as a lagger in the overall equity market. Since the 2021 top on this sector, this obviously took a big hit, with a lot of this, a lot of these names being very overvalued and over speculated on, but no edge yet, right? Same thing with mags. We have all-time high failure on mags potentially developing with a 4% gap left, 6% gap left unfilled, the week of the 12th, right? Like, I do think this reverts into there, but I said a lot of those names: Google, gap draw; Amazon, gap draw; Apple, 224; Tesla has a little bit of room potentially left. So it's just a waiting game. All right, last sector I really want to talk about is XLP. This is a sector with a lot of names that look very good right now, and is a broader red flag in the equity market, right? So this has been underperforming, right? We're up 32% on SPY, and this is a lower beta, slower moving name, but we're currently up 8% on consumer staples, right? This was the highest volume in April that we had since the top put in 2022, and we've been consolidating within this range for 3 months now. And I like this chart, right? We have notable kind of climaxes being built out, sparking good legs, very lack of aggressiveness and effort from those sellers, and notable just pops from this bid here and here and here, and here obviously. But that's a big red flag for the risk on names. You usually see, talked about this a lot. I talked about this a ton, right? If you look at, I think it was part 3 of my How I View the Equity Market series, discussing the rotations. These can happen on a higher time frame scale, but you usually, more often than not, similar to how we did in 2024, not only in April of 2024, or into April, right, from post January expiration into April expiration, right, we had the distribution on semiconductor leaders, the risk on names seeing exhaustion, and the energy names outperforming. Obviously, that reversed in April off the April 19th bottom that we put in, and then the July and 2024 top interim top on Nvidia and semiconductors parabolically putting in those tops. Whereas we then had names like Pep and Johnson & Johnson and McDonald's, right? We go back and look. McDonald's, such a fucking clean move in quarter 3 of last year, right? McDonald's, beautiful high low, beautiful sequence undercutting the 2023 lows with previous climaxes built out. Beautiful. Johnson & Johnson, beautiful move here with a clean higher low opportunity. Pep, right? Absolutely beautiful move starting in June to July, right? And then we look at Nvidia. Look at this, cut 37% from June to August 5th, 35.57. Sorry. AMD, right? Put in a lower high. Tesla put in a parabolic top, interim parabolic top, falling and moved from 140 to 270, from April to June, right, July. So you usually, more oftentimes than not, obviously, April was a little bit of a what's the word I'm looking for? What's the word I'm looking for? A little bit of a outlier in that sequence, right? We obviously saw a lot of these names take big hits. Some outperformed worse than others. Some performed worse than others. But when you see something like this develop, it's a big red flag. We have a name like MO that's really developing a pretty good look. That May 12th print is very notable, right? Because we see a gap up on risk on tech financial names, and on a name like MO and a name like XLP, right? We see a gap down and we see a little bit of a bleed, right? But what happens after that is the exhaustion and the rally that sparks after, in correlation to what developed the week of the 19th in May, is a very big red flag. And you can see that a lot of this money was being, or a lot of these big money was bidding this lower as they were taking profit on their more risk-on positions, and they've been passively building this out since. On a name like MO, where we're seeing a news print be bid, and then a very clean rally on another news pop on Thursday of last week. Target's not the worst. This is not the worst name in the world. not the worst. Look, the July 1st print was pretty telling. Sat underneath this bear gap from the third and absorbed it, and we see the continuation higher. And this is a name that, relative to not only where we're at within the chart in comparison to the April gaps, but percentage-wise, we've seen an underperformance in a lot of these names. Procter and Gamble, I mean, we're undercutting the lows put in on the July report of 2024, so this could definitely be something. Colgate Palmolive is pretty appealing. PEP is really my main focus. I talked about this a lot as well, right? The climax we were seeing built out of this on the 2021 lows. The notable volume we see pouring in down here with the lack of correlation between the result, signaling that kind of bullish divergence, you can say, with the increased effort from sellers and lack of a result. We're seeing the tape flip down here. We're seeing the climaxes build out. We see a really nice spike on volume on the June options expiration. We see a really nice pop on the 27th volume-wise. There's a really clean shares opportunity off an objective risk at 128. And then we see the pop. We see a higher low into the report. Obviously, you can't speculate on the report, but having a comments position is not a bad idea. And when we see, a 7.5% move on PEP on such a candle off, an underperformance where we have these April 7th lows being undercut, that's a big notable sign for the equity market, in my opinion, right? And that's a shares opportunity you take, you can cover it all, and you can wait for an opportunity to bid this on options, and trade this up to 150, right? Now, I don't think that this is really a clean look right now. This is a nice 3% move on the Tuesday session, sorry. But there's not really a lot of volume backing this. The exhaustion that we see yesterday is pretty notable. And I think that, after a 15% move off the lows, we're going to see some digestion on PEP. That's just my personal opinion. And that is one of my favorite looks as far as risk-off names go. So that's something I'm really keeping an eye on. J&J was a really, really clean move, right? The healthcare sector has been kind of underperforming as well. If you can, pay attention to where we're at relative to the gaps that we established, the lows that we put in, and the percentage move, right? But this doesn't offer such a clean look. We have a lot of volume in the May 12th sequence, which, like I said, look at what happened, in XLK compared to XLP, right? It's pretty notable, undercutting those lows with a lot of volume, and then we're seeing a nice pop here. With this kind of consolidation leading into the report, gapping up, absorbing this kind of bear gap that we had put in on the 1st, right? Already started the breakdown in early April prior to the Liberation Day, and then we see a gap up on the 3rd, which is insane. But we see the peg falling, or the kind of 3 days of consolidation following this, and then continuation higher. Really consolidated, compressed name that, has developed a notably aggressive campaign and can definitely push you into this gap that we have left unfilled from 2023, with a lot of 151 million volume behind it. That's notable. ABBV, I really like the chart. I'm really like TMO as a name. We just had a gap up off the report, but similar to PEP, bro, on a really important spot, building out climaxes, underperforming a relatively kind of relative market, broader equity market, and underneath those April lows. Not surprised that we see a pretty clean move off of the report. Nothing I would really touch, but it's something that's notable, right? And UNH is a long focus. I think you can take this to 335 to 380. But like I said, we see a really clean reversal on the highest volume ever. We see an attempt at a higher low that's just not really super clean. We had a 6% gap this session on the 21st, and we see that failed breakout. It's not the cleanest look yet. I think this needs to undercut these lows. This buyer is really relatively weak, and we have a gap to fill all the way from COVID of about $10.50. So that's where I would look for an opportunity on UNH Commons with a pretty objective risk on a 230 being that risk. And New Week opening gap as well. Like there's just not a clean sequence just yet, right? Just yet. Jesus. I really do like Nike, but I want sub $70. I don't really think that this was a great long off 60, speculating on a big beat on the report, and then this kind of 2 day inside bar rally exhaustion attempt at a higher low is not giving you the cleanest structure. So nothing I would touch quite yet. Ford, really clean move, sub $10 to 12, but I don't really have much to say besides potentially, holding a little chunk of that position at a hope for a higher low being put in. But there's a lot of volume backing this print. It is OPEX and expiration week, but kind of got slammed here. We are seeing some notable selling exhaustion and a nice couple of pops on the Monday and Wednesday session. So not a bad commons trade, but something you needed to take your profit off of if you logged at sub 10, 20% on commons. Two back-to-back 5% days on Ford is insane and definitely needs some digestion on a pretty low beta name like F. Rivian is a really clean long that I think is setting up. This is a name, and this is a name that I'd be pretty patient on and cautious because of, like I said, the potential top being put in on growth for the time being. Um, but like if Tesla outperforms, I think this outperforms, and I said Tesla has a little bit of room to 400. This is a name that's been getting beat down, right? We saw the climax built out in May of 2022, similar to a lot of other growth names. We saw a nice leg sparked off that, and this was all after a move post IPO 180 down to 19, right? It got cut an insane amount. We see the breakdown to new lows. We see kind of some exhaustion building up, but nothing necessarily notable. Here's a spike, 50% weak on the highest volume ever, right? So that's your kind of second initial sign of a notable bid down here, pressing the gas a little bit. Then we see that exhaustion. We see, a very notable anomaly print with increased volume and, um, you know, not even touching the percent, like a 0.5% move compared to 50%. So not much of an edge there. We really failed a higher low here, put in that lower high and then 450 million weak volume on 22% decline. See the breakdown into this report where we put in a ton of volume on 38% weak, undercut those lows, sparked rally off of the Volkswagen news on the highest volume ever. So once again, you haven't seen such a clear weekly tape flip. There were probably daily opportunities within this range, but you can't really speculate on a larger position on this without a clear structure. Really clean rally off the lows, 80%, 120%. Continued exhaustion, undercutting the November 2020 or February 2024 $10 range, with a nice spark in volume off the November 11th week. Clean rally, internal higher low, break of structure here, and we put in a really clean higher low here. Last week, a bunch of volume poured in as well. This is your potential at a change in character on a weekly perspective on the Rivian chart, right? That's all I'm saying here. All I'm saying is you can potentially take this opportunity from 13 back up to 17 to 19, right? Which is about a 25 to 40% move. And if you risk this last week's low, about 8% stop loss. But I don't even think that the positioning is worth it right now, right? It's a clean weekly look, but you look at the daily chart. You have the potential to digest this a little bit more. You have a report on the 5th. And I also am cautious with opening aggressive long positions, even on commons, on a risk-on name and a very volatile mover like Rivian. It's a very speculative long and something that I'd be very, very keen to wait on. And I would rather get a later entry off a bull flag on a daily higher low off 16 to 19 than try to time the bottom at 13 and end up, taking a loss at 10. Speculative long, nothing I'm super crazy about. Just an opportunity that I kind of see developing on a commons trade on a name that, is also pretty beaten down, but is in a sector that I think is developing kind of a stall at the current moment in time. So something that I'd be pretty cautious on. MU, low key, potentially could put in a higher low here, but unless we really get something clean, I don't really care too much about it. I was really keen in the beginning of the year. You can literally look back at my 2024 outlook that this would push 127. I just wasn't able to execute with confidence down here on an options position, on what I thought could be the kind of parabolic shakeout that never really offered a trade that I liked too much, minus a potential commons trade in April. First solar, similar to Rivian, beaten down name, developing climaxes, seeing a nice pop and a higher low put in, and then an internal structure here. I like it on commons. I like it on commons here. You have to be careful with this name though. That's why I said cut, trim, or add, trim, re-add, trim, maybe not even re-add. I don't really like how this is developing right now. And then, this is a clean higher low, but the daily chart's not giving you the best sequence. This is a speculative name and a speculative sector. It's very volatile and has a couple of opportunities on some commons trades on in-wall gaps being filled, or in-walls being filled, not new week opening gaps. But is really a speculative sector. TAM does look kind of nice, but this is fucking beaten down and it's speculative and it's volatile and you can just get destroyed with one trade, as you can see on these aggressive gaps. But a really nice rally and a base on the election candle is pretty notable, right? Where we saw 6 million volume on this ETF at an 11% decline, with previous climaxes being built out over the past couple of years, but this is a difficult sector to trade, and a move from risking 38 to 42 is not a terrible idea, but you really got to be cautious. I do like First Solar a lot though. Disney had a nice pop yesterday, but there's not much to say. There's not much to do. The only thing I really like doing here is, one, collecting information, waiting for the opportunities to present themselves. This kind of took a big hit here. VLO could be a cut position if we don't hold that 143 range. That's a pretty pivotal spot. I think there's opportunities on commons on one, lagging names that are being rotated into, like PEP, like J&J, like what else could we say? It's really it. As far as like underperformers aggressively being good longs. There's opportunities on names that have room left on reversion trades, like Google, like XLE, that have been lagging, and there's opportunities on short side focuses going forward, still this quarter into Q4, on Apple, Nvidia, and SPY, with the idea and the thought process and the theory that you can add in at new highs and be patient with taking aggressive sides though. So I still think there's a lot of red flags. I think seeing names like Pep and J&J and Nike put in really appealing prints. Starbucks kind of failed. This never really looked too good following this gap and crap. There's red flags, and we already have a red flag with yields up since Tuesday low and equities up since Tuesday's low. That's a red flag. When we see yields up and we see equities up, we're usually seeing bonds being sold. And that highlights a broader perspective of either risk on or something's brewing. And I don't think we're entering an aggressively risk on environment at all-time highs, especially with the broader economy, but that's just another thought process of mine. I'm very bearish up here, but this takes time. This is an entire process that has to develop itself, and you have to be patient, understand that there's some long opportunities across the board along the way, and there's some potential for some names to outperform as well as being rotated into. And you have to be patient, and you have to wait to get aggressive. You have to understand your trade and your thought process, which is why I said that this is a Q3 trade, a quarterly perspective that leads into next year, and it takes a lot of time. So, quick little market kind of overview. Post-July OPEX, things are going to get a little bit more volatile in my opinion, especially when we let some of these reports pass by. Fed meeting next week, Apple, Meta, Microsoft, Amazon report. I really do think that those opportunities will offer some clean, influx of liquidity that's going to offer some opportunities to trade some short side names, maybe some longs, depending on what we see. But yeah, that's pretty much it. Stay cautious.